Hello, friends. Welcome back to another topic of A to Z Accounting Pro Practical Working Experience. By saying again, practical working experience means we are not just discussing the theories here. All the classes of A to Z Accounting Pro, that is, we are doing the practical working, like how we are working in a company. Okay. So this is not only lectures. We are showing it all the concerned financial statements, how the entries will be affected, and the treatment of all the same in all the books. Okay. So now here today we are going to discuss about accounts receivable entries and aging of accounts receivables and the bad debts, what is bad debts, and provision for bad debts and provision for bad and doubtful debts and the return of bad debts and treatment of all the above in the different financial statements. Okay, before starting, let me tell you, these topics all are connected to each other. So you need to don't skip any of these parts because if you skip one part you will not understand the next step. Okay, so this is a bit complicated, but what we are going to do here is we will simplify all these terms to understand the concepts very easily. So in easy steps, how you can do these things in the books of your company. Okay, so let us go straight to the video. Okay, so for starting, I have here the transactions which we are going to discuss today, and a few notes like what are the terms involved here: accounts receivable, doubtful debts, bad debts, and the recovery of all this debts and the entries for each and every step. How we are going to identify easily. Okay, and of course, I have an aging report here. Okay, receivables aging report is there and before we have the trial balance income and expenditure balance sheet and changes in equity. Okay, except cash flow we will discuss later because it requires 2 TBs 2 year at least 2 years TBs together, so that will not be a problem. We will be discussing it later. Okay, now let us come back here first. Let us discuss what is receivables. In my earlier video, I have already discussed one accounts receivable entry. Okay, bought inventory for 60 days credit purchase. Actually, this is not 60 days. Huh? This is 30 days credit. Okay, let us make all same pattern. 30 days credit from no, well, not bought inventory. I mean, we are going to discuss the receivable. So this is the third entry. Sold 25 pieces of PCs to Mr. Shah Enterprises at 1,200 each. So we have discussed already this journal entry. There will be two journal entries for uh, during the sales. There will be two journal entries. We have already discussed this earlier. Accounts receivable debtor to revenue. Credit will go to revenue and debit will go to accounts receivable. And the second entry will be cost of goods sold debtor to inventory. Okay, so we will discuss. We will have to sell a few more products so that we will get some more accounts receivable so that we can prepare the accounts receivable age. So at present we only have one customer in our hand. So let us sell a few more items so that we will have more customers to prepare the aging. So here I have we are going to discuss another sales entry. Okay, accounts receivable. Sold 100 PCs to various customers. Various customers means this various customers list you can see it in the subledger or accounts receivable. Okay, so that will show in the accounts receivables age. Okay, so here 100 PCs sold at the rate of $1,200 each on 30 days credit. It is a credit sales. So what will be the entry? Here sold 100 PCs to various customers at 1,200 each. Okay, and that is on credit basis. Okay, so here uh, we are creating a revenue 100 into 1,200, 120,000 US dollars. We are creating a revenue. So that is why we are crediting the revenue account. Okay, 120,000 is coming to business as revenue because we are selling this 100 pieces for 120,000. So here the revenue is increasing, right? Our revenue is increasing with 120,000. So if a revenue is increasing, going back to the golden rule, any increase in revenue will be credited. So we have credited 120,000, and which account will be debited? Accounts receivable. Why? Because this is sold on credit for 30 days. So our receivable from clients. So this money is receivable from clients. So that is an asset, right? We have to get the money after 30 days from those clients, 120,000. So this is an asset. So any increase in asset will be debited. So accounts receivable better to revenue account. And the second entry will be cost of goods sold. Here our inventory is decreasing, right? Because we are taking 100 pieces from our stock, our inventory, and we are giving it to the customers. So what is happening here? Inventory is decreasing. Inventory is an asset, right? Our stock is an asset. Our inventory is an asset. So if an asset is decreasing, what will be the entry? Increase in asset. If you are increasing, if you are debiting the increase in asset, then the decrease in asset will be credited. So here we have credited with 100,000. Why we are taking 100,000? Because we bought these PCs for how much price? 1,000 each. Earlier we have bought 300 PCs. In earlier video we have discussed the purchase entry. Yeah, from SSA.com we have bought 300 PCs at 1,000 US dollars each. So that means our cost for 100 pieces is 1,000 each. So 1,000 into 100, it will give you 100,000 US dollars. So that cost we have to debit, right? This cost is expense in nature, right? It is the cost that we have paid for procuring the inventory, for bringing the pieces into our stock. So this is an expense. This is a cost. This is if the cost is increasing. If the cost is increasing, we need to debit that account. Any increase in expense will be debited. So we have debited because the cost is increasing. At the same time, our inventory is decreasing. Inventory is an asset in decreasing, right? Increasing in asset will be debited, so decreasing in asset will be credited, so it is credited. So hopefully you understood this two journal entries. This is during the credit sales. Okay, during the credit sales to a customer, these are the two entries in the books. Okay, and while receiving the cash from those debtors. Okay, we sold the 100 pieces, and if he received cash against those accounts receivable, the entry will be bank account debtor to accounts receivable. Bank account debtor because the cash is coming in, right? Our cash is increasing. Bank is an asset account, so our bank account balance is increasing. So increase in asset will be debited. So we have debited 88,000. We received only 88,000 against 120,000. Okay, so the details from which customers, how much we received, we can see it in the accounts receivable accounts and accounts receivable aging. We will discuss this. So 88,000 we received and we have debited the bank account because there is an increase in asset. That means bank account. And our accounts receivable is decreasing, right? Because if the customer pays, that concerned accounts will decrease. So they paid 88,000. So accounts receivable is an asset. If it is decreasing, increase debit and decrease credit. So we have credited because the asset is decreasing. So that is why accounts receivable is credited. Okay. Now these three entries, one, two, three. These three entries we need to post into the trial balance. So let us go to the trial balance and post it. Actually, I have already posted those entries for to discuss the topic immediately. So this 120,000 is the 120,000 is the this entry. Okay, the sales, the first entry 120,000 accounts receivable debited. Yeah, and the second entry revenue account credited with 120,000. So this is our trial balance here, 120,000 debited, and we need to credit the revenue account. So here is the revenue account. This is credited because we earlier we have we already have a 30,000 revenue. Now 120 plus 30 it will become 150. Yeah. So the second part we need to debit cost of goods sold. Yeah, cost of goods sold is debited with 100,000. We already have the 25,000 earlier, so 100 plus 25, 125,000 is the cost of goods sold now. And inventory will be credited. So in trial balance, we need to go to the inventory and check whether it is, yeah, it is credited with 125,000. Yeah, this is our, we bought the stock, we bought the inventory for 300, which is debited, and we sold the inventory 125, 100 now and 25 for the earlier invoice purchase. Okay, I mean the sales of the earlier invoice, which I have discussed in earlier videos. Okay, now, now let us do this one. This one also I have already posted into trial balance. This is bank account is debited with 88,000. Yeah, so let us check whether it is, yeah, bank account. Now this is credit receivable. So our bank account here, this is the bank account. Here we have debited with 88,000. 500 was our capital. We haven't touched that amount 500K yet because our purchase and purchase was on um, actually on credit basis. So 500,000 plus 88,000. 88,000 is the one just we received the cash from our receivables customers accounts receivable. Okay, and the second impact will be accounts receivable because it is decreasing. Accounts receivable will be credited. So let us check. Yeah, here uh, we have shown the 88,000 accounts receivable is credited here. So that will decrease. Yeah, if an asset account is credited, that means that account will get decreased by 88,000. Debit and credit. So the total will be 32 here. Now, before going to the next part, actually we have during our first entry, we have created an account called Messrs. Shah Enterprises. Yeah. So at that time, we were having only one customer, only one accounts receivable account. So that is why we have created this account only in GL. Now we got various numerous customers. So we need to maintain the subledger. Yeah, the accounts receivable subledger. Because there is, if there is only one or two customers, you can do it in GL itself. No harm, no issues. But if there are numerous customers, we need to control the accounts receivable properly. Yeah, we need to check the aging reports. We need to send the statement of accounts to customers. We need to follow up the collection, and we need to take reports of the customers. We need to see how they are paying, what is the balance and all. This is impossible to see in through the general ledger account. So that is why we need a sub ledger called accounts receivable. Yeah. Okay, so now what I'm going to do, I'm going to transfer this 30,000 to the general trade receivable account. So this account will become zero. So how we will do that? So this is a debit balance in Messr Shah account. So just we will make an adjusting entry. Yeah, here we will. This is a debit balance, right? Debit balance account. So we need to credit this account. Messr Shah Enterprises will be credited with 30,000. So where will be debited because we are transferring to accounts receivable account. So that will be 30,000, right? Yeah. So now all our accounts receivable in GL came into one account called trade receivable account. So this Shah Enterprise also transferred here, and the same will be reflected in our accounts receivable also. Okay. Now let us move to the next part uh, of receivables aging. So all you know what is receivables aging, we have just discussed uh, all the details of the customers should be available in the accounts receivable sections. Uh, the address from the name, address, and payment terms, and the invoice details, and the credit payment terms, and how much we received, how much is the balance, what is the due date, everything will be included in the accounts receivable aging of a company. So this is just a typical example, okay, of an accounts receivable aging report. So nowadays, in all companies, this receivables aging is automated, and we can take just the printouts. But that depends on how we are inputting the data and whether we are checking properly on a daily basis or at least a weekly basis. We need to check the reliability of the aging and receivables. Okay, so now here let us see. We have seven customers here. Yeah, seven clients. These seven clients. This how this came because we have uh, already discussed here. To various customers means these are the various customers in receivables age. Yeah, this is separate from the general ledger account. This is a sub ledger which is connected to general ledger. Okay. Now here you can see the customer name, invoice numbers, and invoice value, how much, and the payment terms in days, how many days we are giving the credit to the customers, and the amounts, whatever we have received from the customers, and the date of that receipt, and the due date of that concerned invoice. So the due date will be invoice date plus payment terms, whatever payment terms we have agreed with the customer, that will be the due date, and the balance amount outstanding from that customer receivable. Yeah. So here we need to discuss this in a proper way. Okay. So here actually, yeah, let us discuss this in detail. Okay, here if you see the accounts receivable aging report, yeah, here this column shows the days past due, which means these amounts, whatever showing in outstanding, are old 159 days, 79 days, 69 days, 66 days. Until now, the customer didn't pay those amounts. Yeah, we are calling, we are following up with them, but they didn't pay. So, what will happen at the year end? So, during the year end, we need to uh, scrutinize the accounts receivable aging to find out what is happening there, which accounts are um, getting bad, really bad, and why they are not paying, what is the reason for that. So here 159 59 days old means this is around 6 months old. Yeah, more than 6 months this customer didn't pay $30,000. Means we need to call the customer and understand what is going on and why they are not paying it. So, if the customer is not responding, or maybe they have gone bankrupt, or their trade license is expired and they run away from the country, then in that case, this 30,000 is not at all recoverable. It is our loss, the confirmed loss, because we know that this money is not, we are not going to receive this money from that client because of such and such reasons. So that this is confirmed and it will not be collected. So we need to identify that, and if it is a confirmed bad debt, this is a loss for us. Yeah, if it is a confirmed bad debt, it is a loss. So that means this amount has to be written off fully. Okay. And for the second one, let us see, this is 79 days old and there is $3,000 pending from Trip and Company. Yeah. Here, while after calling the customer, they are just making excuses. Yeah. They are just, telling various reasons and they are delaying the payments. So this is actually not a confirmed bad debt. Not we are not sure whether it will be paid or not. Okay, it is doubtful. So if the amount is doubtful, that one also we need to consider, and how we are going to book this. At the same time, we need to keep this amount, this 3,000, we need to keep this amount in the receivables. Then only if the amount is showing in the receivables, then only we will follow up with the customer. We will send the statement of account the customer. We will follow up with the customer. Right? If the amount is not there, we will not follow up. But the customer is alive. They are doing business. They are in the market now. So, but our amount is not paying. They are making excuses. So, in that sense, in this case, here comes the provision. We need to provision this amount, that provision for doubtful, because this amount is doubtful whether we receive or not. Provision for doubtful debts we need to create. Yeah. So the treatment of this 30,000 and the treatment of this 3,000 is entirely separate. How it differs? Because this amount confirmed that it will not be collected at all. Only we can do what? Only thing is we can file a suit against this customer. That is the only option here, 30,000. Okay, so we need to remove this fund from the accounts receivables, and we need to uh, uh, send this one to the lawyers for further collection procedures. Okay, file a suit or let the lawyer follow up for this 30,000. But so we need to record, we need to remove this from the receivable, and we need to record that effect in the concerned financial statements. So we'll discuss this. And this 3,000, one thing, we need to keep this one in the accounts receivable. At the same time, we need to secure an amount, like this equivalent to this 3,000, secure an amount in the financial statements. So we are going to discuss these two separately. Yeah. So um, how is it possible? So for before discussing this, let us discuss 2, 3 terms connected with these two entries. Yeah. So that you will understand this concept, how we are making the journal entry for 1 and 2. So let us discuss the terms of uh, receivables. So all you know what is accounts receivable, right? So during the year end, on 31st December, uh, you need to scrutinize your accounts receivable properly and find out the recoverability of each account. What is recoverability? Recoverability means the chance of getting the amount in 100% in full. Yeah. So we need to document the conversations with the client, either emails, phone calls, take notes, and make sure we have the all the signed purchase orders from the clients, and all the delivery orders, and the delivery receipt signed, and everything should be intact for all, each and every invoice. It should be documented properly. Yeah. So during the annual audit process, definitely the our auditor, yeah, our statutory auditor for the year end, they will ask for the confirmation of recoverability. So for this accounts receivable, we need to document each and every invoice properly, like I said. Yeah. So the entry for accounts receivable, we have already discussed the accounts receivable data to credit to revenue. Yeah. Okay. So during documenting the recoverability of accounts receivable, we found out some of the accounts are suspicious, doubtful, like in the aging. Some of the accounts we identified that, like this Tripan company, it's doubtful to collect. Yeah. In that case, we need to make a provision for that because it is doubtful. Yeah. It may receive in future, but not sure. Yeah. Not confirmed. It is not confirmed as bad. It is only probability that may be or may not be. Yeah. Both. Yeah. It is our lucky. I mean, if he receives the money, okay, good. Maybe. But in financial statements, due to we need to record, we need to report the exact business status in the balance sheet of a company. Okay, there should not be any doubt in numbers. So that is why we are making a provision against that doubtful amount. Yeah. So that doubtful amount, what we are going to do, that is a loss actually in the current year. But if we receive after 31st December, for example, in January or February, if we receive that amount, we will reverse that amount back into the revenue. Okay, here in the current year, it is a loss. So we need to book a loss and make a provision. Yeah, this provision is actually a security. It is actually a security against last year's, or let us say previous year's receivables. Okay, so if there is a provision in our books from the last year, that is securing our current year profit. Okay, so here uh, we need to provision this, we need to make a provision for this 3000. So the entry, what will be the entry for that one? This 3000 we are booking as a loss in the current year, right? 3000 will be a loss. Okay, so we will debit bad debts account. A bad debts account need to be created in profit and loss for this purpose. Okay, debited with 3000. And which account will be credited? Because uh, we are just making it as a provision for doubtful debts, or we can say allowance for doubtful debts. So it is allowance for doubtful debts. We are showing it as a liability in the balance sheet. So this provision for doubtful debts accounts will be credited. So what is happening here actually? We are not touching the accounts receivable subledger. Means in accounts receivable subledger, we are not removing this invoice. See, this is still there in the accounts receivable aging report. At the same time, we have secured the loss, and we have on 31st of December during the year end, we have secured the amount with 3000 and reflecting that amount in the balance sheet. Yeah. So that is called, we are just provision it outside the accounts receivable. Okay. This impact only will come in the balance sheet and the profit and loss account, not in the accounts receivable. So this is provision for bad and doubtful debts. Okay. There are specific provisions and general provisions. Okay. Specific provision means, for example, this is a specific provision. Why? Because we know the amount suspicious, doubtful here. We know the amount, 3000. But in some other cases, maybe the companies don't have enough information about the clients. Okay, we don't know what is doubtful here, how much is will be doubtful. In that case, the management will decide, okay, let us say 2% of the total accounts receivable is doubtful, or let us say 3%. So whatever percentage the management decides, we uh, make a provision for that. That is called general general provision. Yeah. So there is no specific amount there in general provision. We just take a specific percentage of the accounts receivable and pass the same entry with that amount. Okay, that is the difference between specific and general provisions. Yeah. So here, bad debts account debtor, why we have debited bad debts account? Because an expense here is increasing. Increase in expense debited. Okay, here the provision for doubtful debts is uh, credited. Okay, because there is an increase in liability, that is why it is credited. Now, so hopefully you understood this concept. If you have any doubts or clarification, I'm here to explain that. So just comment on the video. Okay. And the third term is bad debts. Okay, this is what is bad debts? It is confirmed that this amount will not be collected. So that became bad debt already. Yeah, here this is doubtful to collect, but this is confirmed bad debt. It is confirmed that the customer will not pay because either they go on bankrupt or run away. We are not able to contact the customer. So the only option here is to approach the lawyer, okay, and forward the case to lawyer with all the required documents and let them follow up. So here we need to how we will book the bad debt. So here in the receivable staging, we have already discussed this 30,000 is a confirmed bad debt that we are not going to collect it. So in this case, this is the term bad debt. This is a confirmed bad debts. So in our balance sheet, look in the balance sheet whether there is a provision in earlier years against this or not. Okay. If there is, if you have already provided a provision in earlier years, either specific or through general provision, yeah. If there is a provision, okay, we are lucky. So then this amount will not affect the our current year loss or our current year income and expense account. If there is no provision, then we need to write off this amount in the P&L immediately because it is confirmed that it will not get collected. Okay. So here in this case, in our company, there is no earlier provision. Yeah. There is no earlier provision. We can check the trial balance if there is any provision earlier. See, this is our provision for bad debts. It is zero. There is no provision. We haven't maintained any provision in earlier years because this is our first year, definitely. So there is no balance in provision. So in this case, the treatment of that 30,000 will be directly writing off as bad debts since it is already confirmed in the current year. So before 31st of December, this 30,000, this 30,000 already confirmed that it is we are not going to get the money from this uh, from Shah Enterprises. So this amount is a loss in the current year, and we need to uh, debit 30,000 as bad debt. It is an expense account, and which account will be credited because we don't want to show this amount now here because confirmed that we will not get it collected. So this is not our accounts receivable anymore. This is our loss, right? So we need to remove that 30,000 from accounts receivable. So accounts receivable will get decreased by 30,000. So that is why we are crediting accounts receivable because an asset is decreasing, so credited. Okay, an expense is increasing, so that is debited. Yeah. So this part actually an immediate loss in the current year. Yeah. To avoid that, what we should do, we should provision uh, this doubtful debts provision each year properly. Yeah. If we identify the recoverability of receivables in a proper way, this part will not happen and we will be safe because our current year expense or income and expenses account will not affect, only this entry will be affected, and whatever loss comes that will be adjusted against the liability whatever we have created in the balance sheet. Okay, so I think you have already understood this concept also. Yeah, here we are removing during the bad debts writing off, we are removing the concerned invoice from the accounts receivable. So this invoice will get removed. We have to remove it from the accounts receivable. And here in the provision for bad and doubtful debts section, we are not touching the accounts receivable. Yeah, the in the balance sheet only. We are showing it in the balance sheet and the expense account. We are not touching the accounts receivable. Okay. Now, I think you have already understood these three terms. And the next one, this is, let us discuss the uh, recovered provisioned bad debt. So, after providing the provision in the coming year, okay, after 31st December, 31st December is our closing of the year, and on 1st January or in February or during the very next year, we have recovered the provisioned amount, like this 3,000. If we recover this provision, what will be the entry? Yeah, we will just reverse whatever we have created with the concerned amount. So, for example, in the first week of January, we have received this 3,000. We have received, you have collected, you have successfully collected the 3,000 from Trip and Company. So, if we have collected, since we have already provided a provision, we are secure. So, what will be the entry? So, this provision for doubtful debts will be debited, because here we have already credited. We are just reversing the whatever we have credited here. 3,000 will be debited, and bad debts account will be credited or P&L. Yeah. So we are removing the liability. Yeah. So that is how for the recovery of the um, provisioned amount. Yeah. Recovery of reversal or recovery of while paying the provisioned amount, we need to pass this entry. That is in the next year, not in the current year. And regarding bad debt, what happen if we have collected this amount? Since we have already written off this, what will happen? Yeah. So the bad debts is a confirmed one, and we have already removed this from the accounts receivable, right? Now the recovery of return of bad debt. This bad debt we have collected because the lawyer successfully collected the amount from the customer and the customer paid. Okay. This is not in our, it's already removed from our accounts receivable. So while collecting this bad debt, yeah, it happens, right? Because if the lawyer contacts the customer and file a suit, the customer, most of the customers will pay. Okay, so in that case, we need to re-enter that invoice into the accounts receivable, because this here we have removed, and here we have to re-enter that, and while we receiving the money, we need to pass the entry also. Okay, so for re-entering the accounts receivable, we will debit the accounts receivable because the accounts receivable is increasing. It is an asset. So this 30,000 will be debited, because we are going to receive this, and we are re-entering that invoice, and we are showing that invoice in the accounts receivable, and we are crediting bad debts account because we have debited here with 30,000. We have recorded an expense earlier, but this is not an expense anymore because we have collected this, so we are crediting the 30,000. This is for re-entering the invoice into the accounts receivable. So we are showing the accounts receivable again back into the aging reports. And so now while receiving the payment, because we told this is recovered, right? Recovered means we received the money. So while receiving, definitely bank account, because the cash is coming to our account, 30,000 will be debited in the bank account because we received the money, and will credit the 30,000 into AR, because the account, that invoice we are going to remove because we received the money from the customer, and this is an asset, this is decreasing. So decreasing an asset means credit. So we have credited. Yeah. So this is the recovery entries. These two entries will come only in the next year, huh? Not in the current year, because this is during recoverability. Yeah. For these two entries we need to pass in the current year. Yeah. Provision and whatever confirmed bad debts written off. So now let us move to the next stage. Let us book these two into the trial balance. So first, bad debts debtor 3,000. Bad debts debtor 3,000. It is a bad debts. It's a expense account in P&L. Yeah. So let us go to the trial balance. Let us find out bad debts account. Yeah, here bad debts account debtor with 3,000. 3,000 and provision for bad debts, bad and doubtful debts. This is the provision we have created. It's a liability in balance sheet. So we need to go back and see provision for bad and doubtful debts. This is the provision for bad debts and it is credited with a 3,000. Yeah. So this first entry we have already recorded. Okay. And trial balance. Okay. So we got a balance in provision and we got a balance in bad debts. So our income and expense, we need to see whether it is reflecting or not. Okay, here we need to add the bad debts balance. Yeah. So it is added here. And the next part is, so this is first entry, first 3,000, and the second is in the provision. Provision for bad debts is credited and it is in trade and other receivables primary group. The secondary group is provision for doubtful debts, normal. So trade and other receivables in the balance sheet. So just let us go back to book this entry in the balance sheet here G7 and E8 in the trial balance. So this amount we need to reflect in the balance sheet. Okay. Now the next step, let us go back to the next entry. So this entry now we need to look into the trial balance. This is we have so this 13,000 is our loss, and let us check the other balance sheet is matching. Yeah, our current year loss is 13,000. It's taken. Yeah, from the income and expenses. So it is 13,000 loss, and our cash and bank balance is 588. Total net of accounts receivable 29, and inventory is 175. Yeah, and we have the payables of 305, and in changes in equity, only capital and the loss, current year loss is 13,000. Yeah, which is here. Okay. Now another part we have to correct is our receivables aging part, because receivables aging, even though we have removed in GL and all other accounts this 30,000, we need to remove this in receivables also. In ERP and in any other accounting system, once we have entered these entries, I mean, this entry, only this entry is connecting to receivables aging. So if you enter in an ERP, it will automatically get removed from the aging. So here, since we are doing it manually, just let us remove this because we have credited this amount. So we have removed that amount from the accounts receivable also. Yeah. So you don't need to do this if you are doing it in the system. Once you pass this entry, once you credited accounts receivable, that concerned account, it will get removed definitely, right? Okay. Now, this 32,000 is our outstanding accounts receivable now. This is the accounts receivable. Okay, this amount always match with our general ledger accounts receivable balance, not the net of amount. I mean, net of amount means not the 29,000 net of amount, but the 32,000. In trial balance, you check what is our actual trade receivables balance. It is 32,000. Yeah. So 32,000, check whether it is matching with the receivable or not. So it is matching. So always check that the sub ledger of accounts receivable aging and the trial balance general ledger accounts of accounts receivable aging must match. Okay. That is how you check the correctness of your entries, whether it has done properly or not. Yeah, this 3,000 is we have provided the provision, but it is still there in the account because we need to show it as accounts receivable. Like we discussed, we need to send the reminders to customer and follow up on collection, and also that is why we need to keep this amount intact. Even though we have provided the provision and we have secured this amount for the after 31st December, we have secured this amount. Even if it is coming to us a loss, we need to only affect the balance sheet of the company. Yeah, so it will not affect our next year loss. So since we have already provisioned, we have secured this amount. Yeah, so that is all for today. I hope all of you have understood, learned the concepts. So, in this topic, friends, if you have any doubts, because my motto is to um, uh, simplify the terms. Again, I'm telling simplify the terms. So, whether you tell me whether it is simplified or not, or if not simplified, just let me know which part of this treatment not clear to you. Okay. So comment and let us discuss if required. Let us discuss. I think I have already discussed in a very simple way so that everyone will remember this criteria whenever you uh, tackle with the accounts receivable and provisions part. Okay. Thank you. And don't remember this golden rule. Just only 2 points you need to remember. So that will be very much easy for you to identify the concerned entries in the books. And one more thing, this 150,000 is our revenue, yeah, total revenue. This is the total invoiced amount, right? This is the received amount which will be reflecting in the bank account, except this 30,000 which we have already written off. So this will be 88,000 will be the cash we received in the bank account. So 150 is our revenue. Yeah, trial balance revenue you can see the revenue account. Yeah, it is 150,000 revenue total. Okay, so that's all for now. Thank you for watching and please keep in touch and let me know your opinion. If you have any doubts, let me know. Most importantly, support the channel and share it with your friends. Then only uh, it will reach to more people, and that will help me, help you, help your friends, and help the society. Thank you very much again for watching.